Guys, welcome to Crypto Insight. I've been a professional options trader for 20 years, and about a year ago, I switched my focus from equity options to crypto options. Why? Because of the huge volatility and opportunity in the space. Trading Bitcoin has allowed me to multiply my capital in a safe way. And in these videos, I will give you the benefit of my experience and insight into how I'm reading the crypto vol market and using options to either hedge or speculate on future expected moves in the crypto space. Don't forget to subscribe and like the video, and I hope you find this content useful. Thanks. Okay, so what's been going on in crypto this week? So you can see here, we were definitely in a consolidation phase, right? So you can see after that big move we had down in May, we were chopping around, consolidating in a bit of a triangle formation, okay? And that triangle seems to have broken to the downside, which shouldn't be a massive surprise given the way it was looking. And we are retesting kind of the low 30,000s area. Okay, that seems to be what we're doing now. If we look at what has kind of driven that in terms of the headlines, the sort of main headline that was out was that the Department of Justice have seized a load of Bitcoin associated with the Colonial pipeline ransomware attack, and that seems to have been the catalyst for that leg lower. Okay. And there are the people talking more about what exactly is China's clamp down on crypto and Bitcoin going to look like, and get that's kind of the FUD story that's out there in crypto at the moment, right? So those are things that are weighing on the market, I would say. And you know, it's kind of the big picture levels are kind of unchanged, right? So I'd said a few weeks back that it seems to me that 2,900 is the level to hold. But we could well get a test of that level, right? So if we can test that level, but momentum kind of bottoms out at a level that's above where we were in that original sell-off in May, then that could stage a really nice, that could give us a nice foundation for a bounce to build off, like a more meaningful bounce, and could even argue that this kind of correction phase that we've seen since it begun back in April could well be over. Okay, but we kind of need some more bullish headlines and stories to kind of take hold to see that happen. So you kind of want to see a flush out of the last bit of weak positioning that takes it down into 29. You want 29 to hold. You want the momentum not to be accelerating and making new lows, and you want some bullish news flow, right? Ideally to get there. Okay. Now, in terms of the type of bullish news flow we could see, or what we've already seen, is you had the annual Bitcoin conference in Miami over the weekend, right? And the president of El Salvador, is named Nayib Bukele. I don't know if I'm pronouncing that right. He announced that they want to make Bitcoin legal tender, right? So you've got to get it through his Congress, but that's what he announced. And on his tweet, he gave a few reasons as to why they're doing that, okay? And he said Bitcoin's market cap of 700 billion, roughly. And if just 1% of that market cap was invested in El Salvador, it would increase their GDP by 25%. Okay. He also stated that the adoption of Bitcoin by their entire country would bring 10 million potential new users to the network. And that is also the fastest growing way to transfer the $6 billion a year in remittances that they have in their country, right? So people sending money back home, you know, that Bitcoin makes that very easy, right? And very kind of costless, right? So the point being that whilst you've got major nations like US and China might have incentives to ban the use of Bitcoin because they don't want their fiat currencies to have a competitor, right? You've got all these smaller countries that, you know, that see it as extremely beneficial to their countries to adopt it and to offer a jurisdiction that is not hostile towards it, to bring capital and to bring people like miners into their country and things like that. So think South America, think Africa. These type of nations have got strong incentives to be pro Bitcoin, right? So, you've got a counterbalancing force there, basically, right? So, if this guy manages to get it through for El Salvador, a Central American country, tiny country, but who knows, who's going to follow suit basically at some point in the future. So that's kind of the bigger picture positive story that might come out of this basically. And that's what we're starting to see. But at the moment, market's more focused on negative, and that's why, price is under pressure. So I've already said what my big picture sort of views are, what level needs to hold. If we were to break 29, then don't be surprised to see 20,000, right? I mean, that's, for me, it might have a few like little stops along the way, but that opens up 20,000 as the next major level. I'm relatively well hedged in my Bitcoin holdings at the minute. I've been using short dated puts. I was short some calls to fund them. I've kind of bought them back. As you know, I covered some of my June straddles that I was short in Bitcoin. So just manage my risk to not be overly long, basically. But I've got some puts. They could well decay and go to zero over the next few weeks. But I kind of think we're at a precarious spot that if that 29 area breaks, then all hell could break loose. So, I think you need to, for me, I think it's wise to kind of hold some protection, basically. And that's what I'm doing, even though it is relatively expensive compared to where it has been. So that's Bitcoin. Ethereum, you want to have a look at that. It's actually been performing relatively well. Probably the best chart to bring up is this one. So the relative spread between the two, Ethereum and Bitcoin. Obviously on the correction, we had a violent correction in the spread as well. But have a look at that, right? Bitcoin's retesting its lows and the spread is staying up near the highs, right? So if not going higher. So that's showing you that Ethereum's outperforming, okay? So it's resumed its outperformance, probably because there's less FUD around, right, for Ethereum. The DeFi movement continues. That ecosystem continues to build. That story's not about to suddenly go into reverse. And so, yeah, it's got the whole non-ESG narrative, right? Like Bitcoin, obviously, they're calling it a polluter, whereas Ethereum arguably doesn't have that issue, right? So that's kind of, those things are supportive, I would say. And then you've also got the update that's coming sometime in July. I don't know the exact date when it's coming, but those are all positives potentially for Ethereum and why people are a bit more optimistic about Ethereum and maybe aren't going to smash it down. Yeah. And then that's kind of what Spot's been doing. If we kind of explore a bit of what Vol's been doing, so you can see you had the big spike, obviously up to 150. You had the correction down to around 85, 80, and now we've popped again to about 100. Okay, so in this latest move down, whilst we're nowhere near the highs that we were, we do see a bit of a pop. Right, and you can see that in the term structure as well, where the front end has kind of increased again. Yeah, this one's probably the best one to show. So you can see the term structure's gone a bit again. Short dated have gone up to around 100, 110. The back end's kind of not getting quite as expensive, right? So makes sense. Generally, people aren't sure that we're going to break again and go crazy high vol again. So they're going to flock to the front end, right? Because that's where you can buy your cheapest protection in terms of premium, right? So that's what kind of drives that, yeah? So you see a bit of a pop in the term structure in the front end. You see a bit of a pop in short-dated vols. Long-dated vols kind of need to see a bit more evidence before they're going to pop, I would say, yeah? In terms of skew still firmly for the puts, yeah? So if we look at the skew, the skew is kind of still for puts in the kind of close to 20 vols over for the puts, basically, right? So still showing that the nervousness, the fear is around the sell-off rather than the rally right now, okay? Now, an interesting chart that was brought to my attention is this analytics table, okay? So this kind of shows you the gamma. This basically looks at all the options that are out there, all the open interest out there, and how much gamma is on all the different strikes for Bitcoin options. And it splits it into calls and puts, right? So you can see that all the gray bars that are going down are puts, and the green bars that are going up are calls, right? And what this says to me is that there's a lot of open interest, a lot of gamma positioning on puts from 32 down to kind of 28 area, okay? So the open interest in puts is much greater than the open interest in calls, which probably means that clients, like end users, have bought protection in that region, 28 to 32, and option dealers are short that stuff. So that suggests to me that the street is quite short optionality in that area. So if we are in that area where we are now, basically, between 28 and 32, you should expect to see a fair amount of choppiness from the fact that dealers are fairly short gamma, okay? But at some point, those clients who own that protection may then bang it out to take profit or roll it into other maturities, which will then balance out that positioning and maybe make the market a bit more stable, right? But at the moment, there's definitely potential for a chop at the moment because that dealer positioning looks like it's been caught quite short in that strike area between 28 and 32, okay? So that's something I'm going to be monitoring a bit more going forward. The guys at Spot Gamma are planning to create an indicator similar to what they do for the major indices around Bitcoin. So they can start to monitor Bitcoin positioning to see if that has any sort of tells on what price action is going to do. I'm going to be commentating on that and keeping an eye on that. So we'll see how that plays out. Now, I would say one big thing about the indices is that vol is relatively low in indices. So gamma on options is quite high. And when gamma is high, it can have quite a big impact on price action because the amount of actual futures trading that goes on is meaningful for the asset, basically. Thing about Bitcoin is the vol's at 100. And so when vol's at 100, the actual gamma that you have on options is much, much lower. And so we might find that even though there's a lot of gamma hedging activity that needs to be done, the size of it might not be so big that it's having major impacts on price of Bitcoin, whereas the other factors are much more important and dominant, basically. So that's something we will remain to be seen as we start to analyze it more. But for now, that's something I'm going to start monitoring a bit more. So that's kind of what I'm thinking on that. I mean, there's also the max pain indicator, which I keep an eye on, which kind of says that as we approach expiry, which is a few weeks away still, where's the max pain? And in June, it looks like max pain's at around 44,000, whilst we're sitting down at 32, 33. So I think we're quite far away from the max pain. That I don't think that's in play. I think if we're anywhere near 40,000, then I think the max pain area is going to act as a bit of a gravity and maybe pull it higher if we're about a week out from expiry and we're around 40. But where we are now, I don't think the max pain is really going to have that much impact, right? So I don't think that's going to be a major driver for where Bitcoin goes, yeah. And then I'd say the thing that I found interesting about Ethereum activity, I'll share the chart with you, is it's a bit different in terms of the max pain in Ethereum. So if you bring up open interest on June, which is like the biggest expiry, right? So biggest expiry in Ethereum by a mile is June. If we then home in on June and we look at where that sits, you can see the max pain is 1920. Why is that the max pain? Because all of these green bars represent all the call options that have been bought in Ethereum because the whole world was so bullish Ethereum, right? So there's a load of call options in June expiry that are going to expire from 32 all the way up to God knows 8,000, okay? So think about it, clients have bought a load of these calls, right? And those calls are decaying away to zero. So the max pain is going to be, below 2,000, where all those calls just die worthless and have no value. Yeah. And then think of it from the dealer's perspective. The dealers who are short these calls, what have they got against them? They've got long Ethereum futures or whatever against them. Okay. What happens as those calls decay away through time? the size of the delta that they need to hold against them goes down. So they need to sell that delta, right? That's called charm. Yeah. That charm effect is going to continue into June expiry as these options fade away and they decay away, provided we don't smash higher, right? So what I think is going to happen is, because there's so much call open interest in Ethereum out to June, I think that's going to keep a lid on Ethereum. I don't think that means we're going to underperform Bitcoin necessarily, but I think that's going to keep a lid on Ethereum. It's going to make it hard for Ethereum to really rally and break 3,200 in a meaningful way. But post-June expiry, I think once all that overhang of those calls is gone, you might then get a rally in Ethereum that takes us back towards 4,000. Yeah. So I actually think, based on that setup and where the open interest is, where the max pain is in Ethereum, I think a sensible way to buy Ethereum for those who aren't already long or want to buy more is to sell the June 3,200 calls and buy the July 3,600 calls, and basically take advantage of the fact that there's that big call overhang that is gonna, unless there's some big game-changing piece of news that makes Ethereum go to 4,000 in the next week, which I doubt, right? That call overhang of those dealers just kind of having to let go of their delta hedges as they decay away is going to mean that Ethereum doesn't really break 32 until after the expiry is gone, and then it's got room to fly, right? And by setting up that call calendar position like that, you get to effectively own exposure to Ethereum, but have a nice decay profile, right? So you actually be positive decay on it. You'll be long a little bit of delta on it because the delta on the July calls is greater than the June calls, but it will decay nicely through time. And even if we start to rally towards 3,000, provided we don't break it hard before the June expiry, that position will behave itself and perform quite well. So that's a trade I've started to do myself. I entered a clip of it today, probably going to start to accumulate more of it as we go throughout the next week or two. But I see that as the smartest way to be long Ethereum right now, as that June-July call calendar.
Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks.